Success is achieved and maintained by those who try and keep trying. W. Clement Stone. I want you to achieve success. I want you to maintain it. And I want you to keep trying. 10 to 15 minutes a day is all we ask here at chartingwealth.com. But it needs to be every day. It needs to be intensive. 10 to 15 minutes. Follow this recording every day. Follow these 4 charts with us. Do our methods work on other charts, on other stocks, on other ETFs, other time periods, other time frames? Are there other ways? Answer to all that is yes. What you need to do, though, is find a method, use that method, work it day in and day out, modify it as you see fit and as works. The trick is to be able to follow price movement. Think about it, to accurately follow trends. That's what we do. We don't forecast, we don't predict. We find weekly vertical crossovers primarily, and then what do? We follow them. We follow them day in and day out, and they are, as we say, the magic of weekly vertical crossovers. And again, those weekly vertical crossovers are predicated on what? The price percent oscillator. We've got a great training for you. It'll be included in the show notes today for everybody who subscribes at chartingwealth.com for free. If you're not a subscriber, go there. Not only will you get our master indicator, the price percent oscillator, and that super training, the other thing I have to announce for you is we have a 3-part series, Options Made Simple, parts 1, 2, and 3. The first part is coming out tomorrow. It will go out over the weekend. You're going to have to be a subscriber at chartingwealth.com. Doesn't cost anything. Go there, put in your name, email address. That list is never spammed. You will get part 1, then you'll get part 2, then you'll get part 3. Part 1, how options work. Part 2, which will be put out Monday, understanding option pricing. And then part 3, which will be put out Tuesday of next week, how to practice trade options. You need all 3 of those to understand Options Made Simple, the Charting Wealth Way. I want you to have that. You want to know more about what we do? We'll talk about how to purchase the book and become a Patreon supporter into the broadcast today. But right now, let's jump into these charts. Everything down for the day. Now, when we look at this week, what do we see? S&P 500, we see price above the weekly, falling below the 2-day. We're going to watch that. Price percent oscillators lost some of its energy. Derivative oscillator heading up. Still have a green open box candle, higher candle than the prior week, higher high than the prior week, but we do see some weakening. Now again, we had that weekly vertical crossover back on the week ending the 1st of November. We go from the weekly chart to the 2-day chart. Let's check it out. Look at what we have forming here now. This is Wednesday and Thursday. This is a completed candle, and it's falling below the 2-day trend line. We could draw a closer line in time, and that would allow us to connect, almost, 4 candles. That's an okay, but we're still losing some energy sitting right there on it, not well above it as we were in the last trend line. So that's a problem. Price percent oscillator is actually heading down. Derivative oscillator peaked all the way back on the 2-day candle ending the 7th of November. So again, we've continued to see up movement, but it is now weakening. So we're paying attention to that. What does that red open box spinning top almost a doji tell us? Indecision, tending down. And again, we're going to keep watching, seeing what there is to see. We still, again, the weekly and the 2-day are still in confirmed up moves. What's that 4-hour chart doing? It crossed over going down back on the 20th, down strong on Wednesday. And this is interesting to note now as we look at the tails or the shadows or the wicks as they are called on the bottom of the red down candles. We see that the lowest low rather, was reached. It was $309.06. That was reached in the afternoon on Wednesday. Didn't reach that on Thursday morning or afternoon, but we do see price pushing through, sitting right there on the 2-day trend line derivative oscillator gaining to lots of downward momentum, price percent oscillator heading down. So we'll pay attention to that. Again, if for some reason Friday's a big up day and we see some surging and crossing over in the morning, then of course we still have what? We still have the weekly and the 2-day in confirmed up moves, so we'll watch, see what the charts tell us. Now, the S&P was down 0.15%, the Q's down 0.22%. And again, we see how on the Q's that 2-day trend pulling through that. We see the price percent oscillator losing some momentum. Derivative oscillator, however, still heading up. Again, still reaching a higher high so far this week. Candles above. So the weekly is weakening a little bit, but still okay. 2-day weakening also. Price percent oscillator heading down. Derivative oscillator losing momentum. Similar to the S&P, we see that we've got a red. That's almost a doji. So means a great deal of indecision. And when we try to draw ourselves a decent trend line connecting two candles, 3 candles is what we prefer or more, we still see that we got price right there on the trend line. Some loss of momentum still above the weekly. But again, that price percent oscillator heading down. So weakening now could just be digesting gains and getting ready to move up again. That's why I'm telling you, pay attention to that 4-hour chart. 2 days of down movement, hadn't reached a lower low throughout the day on Thursday than we did on Wednesday afternoon. So watch, see what there is to see. Keep your eye on the charts. See if there's an opportunity to jump into a practice trade going up on Friday. Who knows? Might offer you an opportunity, might not. We'll continue to follow these charts and practice trade when opportunities present themselves. What's going on bonds? Bonds were down for the day. Now remember, bonds a confirmed down move on the weekly chart, but we see a green open box candle forming for the week. First one we've seen since all the way back in early October. But we see price pushing through the down weekly trend line. Price percent oscillator not quite flat. Derivative oscillator losing downward momentum, still negative. 2-day chart ended with a crossover going up. What does that mean? Well, it's important news for us. There is a momentum shift on our 2-day chart. Now, it's not a weekly vertical crossover. It's a 2-day, but it does mean that it takes us out of the realm of jumping into a trade if that 4-hour chart rotates back over going down, unless it's substantial enough and we see it pull back through. Don't know if that's going to happen or not, but that's a pretty big up candle there on that 2-day chart. And we will redraw also our 2-day trend line from going down to going up. Aren't these charts beautiful? This is the paid version of freestockcharts.com. It's TC2000. If you're interested in it, I think it's the best online trading platform, tracking platform, charting platform that there is on the planet. Very inexpensive, wonderful, works wherever you are, and doesn't require any special setup on your computer system. If you're a Mac user like I am, there's versions of things that you can do, but you can use the online version, which is great. Everything is wonderful about it, but I encourage you to practice with freestockcharts.com. When you're interested in going on the paid route, look for the link in the show notes. We have a $25 discount. Give it a try. See how you like the free version first. Okay, let's go from the 2-day chart on 20-year bonds to the 4-hour chart. What do we see there? Well, went up. This is really the first pullback that we see as far as those candles go, and we can see that the price percent oscillator really lost a lot of energy. Derivative oscillator losing energy. We had a spinning top in the morning, down candle in the afternoon. So again, we'll watch, see what there is to see, what we can learn from this, and just where things are going. But we do have a holdup in 20-year bonds due to the fact that we've now had that crossover going up on the 2-day chart. So we'll watch, wait and see, let the charts lead us in what we need to do. Lastly, we go to gold. Gold down for the day, 0.55%. We can see that when we look at the weekly chart in gold, price percent oscillator is really going down, derivative oscillator gaining downward momentum. We look at the candle for the week so far, and it's a green solid box. Now, what does that mean? It means slowing and down movement. It's not a green open box candle that we see with surges, but it is showing us a slowing in down movement. Price percent oscillator, however, is still booking on down, and the derivative oscillator is gaining downward momentum. At 2-day chart, what we really see is a sideways slide. We have a red spinning top, means indecision, almost a doji, indecision tending down, derivative oscillator losing downward momentum, that price percent oscillator still heading down in gold. And we go to that 4-hour chart, what do we see there? Still hasn't had enough energy to cross over. It's really been going sideways, was down in the morning and the afternoon. Continue to keep your eye on this 4-hour chart for a potential short position in gold for you to practice trade. Again, if you've already taken that initial training we put out on options, you might do a practice options trade on a put if you have a crossover going down and feel like it. But again, just encourage you to continue to track and follow these charts with us every day. Hope that you, on Wednesday evening, pulled back from the market, looked at the big chart, that is the weekly chart, to really get a feel for the overall mood of the market. That bigger chart's going to give you that. All things being equal, market always tends to move in the direction of the largest chart. It's worth it once a week or so to pull back and look at that. And now let's keep our eye on what's really, really going on. Folks, that's where we are as we end the day on Thursday, go into Friday. So excited about you getting these 3 option trainings, but you do need to subscribe at chartingwealth.com in order to get them. We're going to start releasing them on Friday, then on Monday, then on Tuesday. They're all coming out for you. And if you would like to support us, you can buy the book. Look for the link in the show notes, Charting Your Way to Wealth, a great way to support the channel, and also our Patreon friends. If you become a Patreon supporter, once a month, you actually get to engage in a question and answer phone call. We do some in-depth training, particularly taking your questions and helping you out as best we can. And we also have short chart training, long chart training, Bitcoin training, all sorts of fun stuff. Depending on your level of support at the Patreon page, you can in fact get a free book. You can also get a free set year supply of our traders' journals that include our trade worksheet, daily market worksheet, weekly market worksheet. Those are also for sale if you go look to purchase the book. My friends, thanks so much. We love to hear from you. CW@chartingwealth.com. God bless, all the best from the whole team at Charting Wealth World Headquarters.